So a bit of discipline, if you don't mind. So we've heard about their what I call a pure trade documents digitalization proposal in the electronic bill of lading. Ladies and gents, please. Thank you. So we heard about a pure trade document, which is the electronic bill of lading, a critical one though it is, with as being a document of title. But the Electronic Trade Documents Act, of course, applies equally to trade documents and to trade finance documents. And I was particularly struck with I think it was Niels who made the comment, make data work harder. Let's sweat that data. A data is a representation of an act or an event or an attribute. And the way the world is that you only have that event once. You only have one of those attributes. So the replication of data immediately brings in a departure from the way the world is to the way it is digitally represented. So the less we do of that, I think the better the outcomes we have. So building on that theme about the application of digital capability to what I call pure trade documents like the bill of lading, there's clearly a very big opportunity around trade finance, the speeding up of access to trade finance and the settlement of trade finance liabilities. So that is the focus of this next panel, which is chaired by Wayne Mills, who's corporate finance advisor to our corporate digitalisation task force. It's been on loan to us in the ICC United Kingdom for the last few months, and very effectively so. So I'll hand over now to Wayne.
Thank you, Nick. Good afternoon, everyone. So conscious of time, hands up if you've got one eye on lunch. Thank you for your honesty. So we take our responsibility seriously to make this engaging, interesting, and to get you out on time, but it will be worth the wait. So how to unlock digitalisation? What I would ask is, can we have some active participation? So please don't wait until the end for a Q&A, because we'll inevitably run out of time again. So if there's anything, please put your hand up. Hopefully you can project. We don't need to find a mic. But I quite like healthy disagreements as well. So please challenge us if you don't like what you're hearing or you fundamentally disagree, or you can improve on the suggestion, then please do. 4 areas that we're going to cover, the infrastructure, the ecosystem. Can the unlock of digitalisation lead to access to cheaper financing? Thirdly, is there a way to make settlement more efficient? Because, of course, at the end of every trade transaction, there is a settlement, there is a payment. And actually, does it help or hinder the risk agenda? So quite broad. We've got Parvaiz dialing in from somewhere in Asia, just catching up on his emails, I noticed, before we get started. The final thing, I guess, just to make this useful is we're going to try and make, practical use cases, examples, because we heard from a few people this morning around start small, but I guess I would implore you, don't think that means go slowly, because actually start small, yes, but actually we need a little bit more velocity. Chris and I and Natalie were in Brussels last week with some European treasurers, and there was a really, really good energy. And the final thing I'd say, actually, from Jane Smith, who I don't know before today, actually, her comments earlier, ready to get going, hashtag be more Jane, right? Just enthusiastic open-mindedness, I think, is what's needed to really get going and turbocharge some of this. So with that, let's do some introductions. Parvaiz on the line. Can we start with you? Brief introduction and your sort of role. Thank you.
No, sure. Can you hear me okay?
Yeah.
Very good. So I'm Parvaiz Dalal. I head Citi Payables business based out of London. It's one of the largest business and the fastest growing of Citi. We cover close to around 25% of the market of supply chain finance globally. So every 1 invoice out of the 4 invoices is processed by Citibank. We operate out of 82 locations globally, 160 currencies. And I'm proud to be on this panel to talk about what digitization and automation that we have deployed to fast track and deliver. I think COVID was one of the I would say, a blessing in disguise, where we expedited the whole digitization. But I think happy to be here on the panel with Wayne, with Dominic, and with Shobhit. And I'll share some live examples of what we have done in this space. So that's my backdrop. Yeah, thank you.
Thanks, Parvaiz. And Shobhit?
Thanks, Wayne. So my name is Shobhit Singh. I work for Trafigura. I have been with Trafigura for almost 10 years now. I head the global concentrates team for trade finance based out of Geneva. And during my tenure with Traf, I have worked on most of the business verticals that we have, like, on the energy side, on the bulk sector, and more recently on the concentrates. I think for trade digitalization, it's a very interesting topic. And I mean, personally, myself, I've been working on that for quite some time. I see this as an enhancer or a catalyst to doing more trade, which I think we need to all agree on a global supply chain or global ecosystem. And I think this would be discussed through some of the examples that we will share in the panel.
Great. Thanks, Shobhit. Dominic?
Yeah, good afternoon, everybody. Dominic Broom. Hopefully you hear me loud and clear. Another one of those recovering banker types. I've been working in the world of fintech for the last 4 years, since leaving banking after a number of roles in leading global banks over the preceding 30 years. And my role at Arqit is to bring digital negotiable instruments, particularly those finance instruments that Sean Edwards was eulogizing about in the panel before the mid-morning break, promissory notes and bills of exchange in digital form to market. That's an endeavor we've been working on for my colleagues and I for the last couple of years. Obviously, the trigger for that has been the adoption of the ETDA and other Melita-based legislation around the world as we continue on this wonderful digital journey.
Thank you. Okay, and the ask for the panelists is short, succinct answers. So I want to try and keep this sort of bouncing around a little bit. But please do jump in, as I say, if there's anything you want to contribute. So first of all, big picture, in terms of infrastructure, nobody has ever said to me, and I'm sure they haven't said to you, they think digitising trade is a bad idea. But we've heard today as well, lots of people have been working on this for a number of years. So why aren't we further forward, I guess, is the key question. Why are we still talking about this, and why are we still talking about Unlock? So Dominic, to you first, perhaps, your sense of where are we now? What's the start point? Where are we now in terms of being set up for success?
Well, I'll use the analogy that a corporate treasurer at that session in Brussels that you referenced just now, Wayne, put to me, which I thought was wonderful. He said it's like being on your summer holiday outside your villa and you're baking in the afternoon heat and you've got an enticing swimming pool in front of you and you know you want to leap in, but there's always a moment of hesitation. And once you're in there, you know it's going to be fantastic. So I think we're at that, some people might refer to it as a tipping point. I'm calling it the hesitation point. And the reality is, and we've spoken about, a number of excellent speakers have spoken about it already this morning, digitization in various forms is already part of most, or if not many, transaction banking processes today. And if you consider that, in the context of what my colleagues and I are doing, which is bringing tokenized assets to market, tokenization, there is nothing to fear from that either. I would ask, for a quick show of hands, how many people in this room came here today with a paper travel ticket? I'm not seeing a single, oh no, I'm seeing one hand, a couple of hands go up. Okay, very much in the minority, those folks that have come here with paper travel ticket, because we're all quite accustomed to traveling with a digital ticket. And for those of us that have traveled internationally to get here today, your personal data is embedded within that ticket. So my point there is sensitive data. We're perfectly at ease with the tokenization of that. Why not trade? We're not going to provide answers to that simple question in the next 35 minutes. But the other point I want to bring forward is that digital encryption and digital ledgers, they are nothing new either. It's the way in which we are creatively using those technologies that will enable the advances that we're all collectively looking to make in this domain. And what a great job the politicians have done. I'll be thanking Baroness Neville-Rolfe personally this afternoon when she comes to speak with us, because here in the UK, those barriers, that legislative barrier has been taken away frankly, I think we need more proactive engagement from government standards bodies. You know, ICC have been totemic in terms of their leadership in this domain to drive these initiatives forward. But there is no reason not to take that plunge into the pool.
Good analogy. Thank you. We won't ask you two gentlemen to leave just yet with the paper tickets, but we'll see how we go. I should have said as well, we've obviously got the sort of the golden triangle of bank, tech, and corporate. So hopefully, you know, the trying to sort of be the glue to bring this together. And again, invite to you, does this flow? Does it make sense? Are there some barriers that actually just exist that we're not even facing into? Parvaiz, your thoughts from an overall ecosystem point of view, from a bank perspective?
No, I think, Wayne, one of my favorite tagline is that we are a largest platform provider technology company with the banking license and the balance sheet and the relationship of the client. So I think the entire success of our business hinges on what technology we deploy, how we digitize the flows, and how we automate the end-to-end cycle rather than looking on a piecemeal basis. If you have that visibility, if you have that operating model, if you have the scale and the size, I think it becomes a lot more powerful. It becomes, and the bigger important part is able to comply to the regulatory and the legal environment in the respective jurisdiction. And that's very important as well, because the data, the whole technology is a critical component, right? So I would say the entire digitization, automation is a very important tool, because the speed at which our clients wants to make decision, if you are not equipped to handle that, then I think you are doing a discredit to your customers.
Yeah, absolutely. Okay, thank you. And look, we know banks and technology providers are very good and smooth at telling their story, but from a corporate perspective then, does that resonate? Does it make sense?
I think, yeah, Wayne, it makes sense, you know, and what Parvaiz was saying and what Dominic mentioned, I think it all makes sense, right? I mean, at the end of the day, we are sitting here because we have the passage of the ETD Act, we have, you know, the technology, we have the right infrastructure to work on trade digitalization. I think no one is doubting that, right? The main problem, I mean, from my perspective, I see is mostly the inertia to move forward, right? I think most of you know, the supply chain partners, or you know, bankers for that matter, I think it's just the inertia that they are not able to move forward, which I think Dominic was very right to say, like you are sitting in front of a swimming pool and you're just hesitating to jump in, right? I mean, when I talk about this infrastructure, I would more refer to the case of adoption, right? You talk about the supply chain, whether your counterparts, your suppliers, your receivers are ready to do it. You talk about the banks. I mean, I'm sorry to say, like a lot of banks are not ready to do it, right? They're still working on it, right? So this is one of the things that you need to work on. Then the next target is on the shipping side, right? Are all the shipping, you know, entities ready to do it? I mean, there are talks about various initiatives being done, but when you talk about, for example, I can even go into the fact that, you know, when I try to do my bulk shipment and I ask my chartering team to speak to the ship owners, like a lot of times they hesitate to move on to, you know, doing electronic bills of lading, for example, right? So there are a lot of inertia, or let's say hesitation in the market to move forward. And as we were calling in the morning, like just go ahead and just do it, right? And that's the next thing to work on. I mean, we have everything that is possible for us to do it. I mean, I have been doing you know, different trade digitalizations for the last few years, right? I mean, there's nothing stopping us from getting there. It's just about us taking that one step. And as with every great thing, you know, digitalization would also start from within, right? We need to start doing it that ourselves, right? You start with your company, with your corporate, you go with your bankers, you know, you share examples, you move forward.
Okay, and then something close to many people's hearts, then the P&L. In your experience, has this led to cheaper financing opportunities for you? And it wasn't meant to bring a panic attack with the bankers in the room, but just, you know, let's see where we are.
I will try to balance this answer in. It's a complex situation. I would put it that way. From a P&L perspective, definitely it's it leads to providing cheaper financing, but not necessarily the banks are able to give cheaper financing, right? And the way I would put it is, for example, for big corporates like us, when we go to our bankers, right, they are already, you know, squeezed on the margin. So if I tell them that, you know, reduce your price down, maybe I think they would have a heart attack, definitely, right? But then, for example, when you talk about, you know, SMEs, I think there is a real advantage, right? That you can really drill down on the cheaper financing there, and that's where the alternative, you know, investments also come in. You know, there are a lot of funds now who are looking into trade assets, and we have been talking about that. So this is where you can pitch in. What it does, from a general market perspective and also from an SME perspective, is to give access to more liquidity in the market, right? Because a lot of people are able to get into the market and give or provide funding, because there's no more barrier of who is going to handle the documentation. Like, there are a bunch of you know, papers flying around the world. Is a boutique firm or an investment entity able to handle that? Not really, right? And that's where these digitalization concept will come in. And for us, I think the main factor that will come in is when you talk about banks, we can easily you know, create this ecosystem of cheaper financing by doing certain things. For example, having the concept of security, which I have been discussing with a lot of bankers on my side. And the security aspect, if resolved, I mean, automatically from a banking perspective, for people who have worked on that, they would understand, because when you move a cargo which is on unsecured to a secured basis, you can provide easily cheaper financing to your customer, and this is where we would be able to gain some momentum.
So, okay, so that's interesting. So obviously the scale and the size and the purchasing power and the leverage of Trafigura, not everybody has, right? So first of all, let's recognise the relative bargaining power. So perhaps, Dominic, from your point of view, and thinking about the panel this morning around using some of these more traditional instruments in new ways, so bills of exchange, promissory notes, inherently have features of negotiability and enforceability. Are you seeing non-bank liquidity sources, you know, non-bank sources of liquidity coming in, and are they attracted by, you know, this digital world?
You know, absolutely. I mean, it's probably a gross generalization, but you know, the non-bank sort of investment type funds that are looking in this space tend to work on quite a transactional basis as opposed to a relationship basis. My friend to my left here at Trafigura obviously can draw on a lot of very strong bank relationships, but that, you know, it's much harder to find at SME level. You know, in direct answer to the question, Wayne, what I believe, and you know, we're seeing more and more live examples of this, is that digital forms of negotiable instruments, tried and tested forms of finance, deliver the assurance of documentary credit solutions whilst retaining the flexibility of supply chain or open account functionality that most businesses today are wanting to get to. I mean, it's a bit like, it's somewhat like Back to the Future. It is winding back the clock. It is bringing those tried and tested instruments into play that, you know, everybody knows, or used to know at least, provide inherent value. And I think it was a very good point made by one of the speakers in the last panel, in that order to get adoption, you have to have, you know, there has to be something in it for everybody. I think he used the example in sort of, was it airway cargo documentation? You know, solutions are a great benefit to the airlines, but what was the rationale for the customs authorities to adopt? With negotiable instrument-based finance, there's benefits for buyers in terms of maintaining controls over their supply chains, reduced input costs by distribution of funds more efficiently up and down their supply chains, and tapping those deeper pools of liquidity that we've been referencing. For the suppliers, there's benefit, lower funding costs, security, higher advance rates than against non-negotiable type solutions. And for the institutions, it's, for the FIs, both banks and non-banks, greater transactional security. I mean, in the previous, or one of the discussion before the mid-morning break, you know, there was concerns being raised, quite legitimate concerns about the security of digital solutions and digital data. I don't want to get into a sort of a diatribe about data security, but that's Arqit's core function as a business, by the way. Anybody who wants to talk about that, do come and speak with me. But I felt that the point that was being made was made, from an improper, if I can put it that way, premise, in the sense that paper isn't secure. We've become accustomed to the view and the fact that paper's secure, but it's far from secure. We only have to look within our own industry at how much fraudulent activity regrettably takes place that is paper-driven.
Indeed. Okay, thank you. So lots of, dare I say, theoretical benefits. I said we'd sort of move practical. What's really happening then, So Parvaiz, again, one of the biggest banks in the world, very, very big balance sheet, very known for innovation. But corporates, we know, are busy. They're busy people, they've got competing priorities. So I think some of this as well is why bother? Where's the benefit? So, and actually, if corporates do this, it probably means they don't do something else. So this is a value choice, as a relative value decision. So Parvaiz, are you able to share one or two specific real use cases that you can share that will highlight how you can bring these bring some of these benefits to life?
No, absolutely. I think, Wayne, I can definitely share more than two cases. But before I go to the two cases, I'll restrict it to. But before I go down that path, I think I agree with Shobhit that, and with Dominic as well. I think the whole execution of the technology and ability to implement depends upon how well you know the entire life cycle, the risk parameters, whether are you able to take the security or whether you are able to predict the risk in a proper way. That changes the whole digitization. I think it's not about just the technology and the platform, it's also the processes and the risk associated with that, and the legal framework of how you define it makes it a very liquid instrument in the secondary market for the investor, not just banks, but alternate investors to come and participate. For just speaking from where I run this business, I distribute more than 50% of my book in the secondary market to banks, non-banks, private funds, investors, etc., on an ongoing basis. And the supplier, when he comes into the platform, his main goal is that I need the funding the day my buyer uploads or accepts an invoice, and that sustainability, that resilience is a very critical component. Your technology, you can put all the technology, you can put everything, but if you don't fund him on the time, then everything goes out of the window. So that is one element. Secondly, whether are you able to provide the cheaper, to Shobhit's point, are you able to provide the cheaper source of funding? And that's a very important data point, because that it adds back to the value chain of the goods that the large counterparty like Trafigura is sourcing. And that has to be clearly demonstrated. And I think to your point, Dominic, Wayne, I think there are 2 or 3 examples I would tell you which we have deployed apart from the technology, because we run it at 82 locations that I mentioned, out of which at 75 locations, we have one single platform, one single documentation, one experience for the buyer and the supplier. And that's a very big advantage because they don't need to have multiple environments. Let me give you a few examples, right? So when we were, going and filing liens in North America, we used to hire lawyers to go and read the liens. Today, I can read it by a machine. It used to take like 10 days and we used to spend millions of dollars. It's now done in 27 minutes in my shop. If you have a large universe of suppliers and you want to see which suppliers is rated what is their DSOs, what is their payment terms with other buyers, etc., I can do it the same day by data ingestion through an API connectivity and play that back to you, right? So you can make a decision at a click of a button that this is my universe of supplier, this is that average payment terms, this is my payment terms, and I can push the payment terms out, or their cost of funding is X, and if I put Y on the table, they would have the saving. The third component is all the electronic signatures and the DocuSign. And it is not about just implementing without knowing the underlying laws of the country. You need to have a knowledge whether they are enforceable in the country or not. And that is where I think the more important component comes in. We are live in 58 locations globally to digitally sign documentation. And that saves the whole process of how the supplier experience comes in. And the last component is, there are a lot of time the counterparties come and walk into the bank asking to make changes, amendments, etc., etc. If you have a proper two-factor authentication and identification of the user, a lot of problems could be solved by the technology, but you need to have that universe of understanding. Which are your counterparties? Who's the authorized signatory? Whether are you dealing with a non-signatory of the company, whether you are dealing with a signatory of the company, and what powers and delegation he has to execute the transaction. And that framework is very important. The last example I will give you is digitally negotiating documentation. I think there is nobody today who has the ability like Citi to able to negotiate documents digitally. They all employ lawyers and they negotiate it. We could technically negotiate a document digitally for our suppliers. And the last, again, I've given you 5 examples instead of 2. But the last one is that the supplier, if he wants to get a payment in an alternate currency, can he on a click of a button see the rate and convert? I think on a Citi platform they can do it. So these are very good examples which are live, running and adopted by Citibank. And that is why we have a 25% of the market share. It's by the design and not by the luck that we capture more and more businesses.
Yeah, absolutely. No, it's worth being ignored. They were very good examples. Thank you. All 5 of them. So look, so I think where that takes us then, we've got, and I was writing down, embracing technology, open-minded enthusiasm, certainly structural flexibility in some of the facilities that are provided, and big thing around the negotiability aspects, which can help with certainly with Citi, big distribution model. Banks tend to need to put velocity into their balance sheets in terms of efficient use and deployment of RWAs. So I think there's a very big, important side benefit of the negotiability aspects of these digital instruments. Dominic, from your point of view, again, specific use cases that perhaps relatable, and in particular, scalability as well, because I think we've probably seen enough of these one-offs. We've done the first to do that, but you don't see the second. So I think, how can we get this repeatable and sustainable with a small s? So any use cases you can share?
Yeah, absolutely. We heard sort of a couple from one of the earlier panels this morning, and it's building on that. It's looking at repeat supply chain flows, be it in manufacturing. So let me take an example. Some of those present in the room would probably be familiar with the fact that domestically in India, there's a highly advanced and highly developed digital invoice finance market because they have a single source of truth that is their goods and services taxation ledger. So every invoice has got a record or an invoice number that is recorded on that ledger, and that facilitates a very vibrant, very active digital invoice finance market. Increasingly, as Indian businesses turn themselves into global powerhouses, and we're looking and working on a case right now in the pharmaceutical sector. So a generic pharma producer in India selling into the UK and Europe, and they're currently doing that under very sort of stodgy, sorry, bankers in the room, classic sort of documentary credit terms. They want to enhance or reduce costs and management in terms of their supply chain, effectively get the same experience that they're getting domestically with an invoice finance solution in India internationally. And they've hit upon the fact that they can take invoice data and other associated data, put that in a digital envelope, create or draw up a digital bill of exchange. That then gets accepted through the sort of processes that Parvaiz was talking about, 2FA authentication, signature by the UK or European purchaser. That instrument is then endorsed to a financing institution, bank or non-bank, and this is very much where those deeper pools of liquidity of non-bank interest in this type of instrument is becoming increasingly large, because these are tradable, negotiable instruments at their heart. And therein, we'll be going live very shortly with that and other similar examples. A great use case. If we consider the vast majority of supply chains, there's an awful lot of trapped cost within even the most efficient global supply chains. And our colleague from Boohoo was referencing this in an excellent discussion earlier this morning. Those suppliers at both distant and less distant ends of supply chains have got embedded financing costs that are often running, well into the double-digit margins. Negotiable instruments, if correctly used, provide a great functional tool to distribute cost at the more advantageous borrowing costs of a purchaser, not obliging that purchaser to pay right now, agreeing financing terms, allowing that supplier to benefit, all parties to benefit from that arbitrage between financing cost at one end of the supply chain and financing costs at the purchaser end.
Yeah, absolutely. And I think for those working in Europe, the combination of a supply chain finance program with some of these instruments digitally can actually help you navigate the late payment directive discussions, which are going through at the moment as well. So it doesn't have to be at the expense of ESG objectives. It can actually be complementary and supportive of those. So one of the things over the last 4 or 5 years, I've certainly seen banks and technology providers more voice of client co-creation type environments rather than creating something and then trying to deploy it. So Shobhit, from a corporate perspective, any examples and use cases? Again, Trafi as a business, I guess, probably has certain specific needs that some businesses won't have, but what does the real world look like for you in terms of use cases?
No, thanks, man. I think in general, what Parvaiz was talking about in terms of digitalization, I think it all makes sense, and some of that we have been utilizing in one way or the other. In general, when you see the structure of the supply chain, and that's what we are talking about right now on the financing side, I think the receivable aspects, if you break it down into a few factors, right? I think the receivable aspect, or let's say the post-shipment finance for that matter, are relatively easier to digitalize, because all you're talking about is a receivable, basically an invoice, right? That you need to upload onto a platform, which can be a platform on Citi, on some other banks, right? And that can be done with a click of a button, because it's all on the technology, and it's easier. I think where it gets a bit tricky is when you talk about the voyage, like when the cargoes are in transit, or when you're talking about pre-shipment finance and those factors, and that's where the whole financing aspect gets broken, right? When you talk about trade digitalization, and that's where I think with the ETD Act, with the negotiable instruments and also the title documents, that's where things should change now. I mean, we have been talking about it a lot, and we need to do it as we have been saying. On the shipments, right? I mean, and personally myself as well, I have been working on various electronic bills of lading in the last years, and we have done like several end-to-end transactions. And I mean, I'm not a believer of print convert, right? Wherever we talk about those transactions, I just say no. That's not digital, right? I mean, what I look at, doing end-to-end transactions on the platform, whatever platform it remains, I think that's not something of my concern. For me, the digitalization should be system or technology agnostic, right? That's the main part. But when you go into, for example, electronic bills of lading, I can give you a very simple use case, right? I mean, we do a lot of shipments on our business, and for example, for concentrates, we have shipments, coming from the western part of the world, from Latin America and some other parts, going to east, because that's how the business runs. And if I talk about, a standard, transaction without, digitalizing this, issuance of a bill of lading can take up to, and a possession of it can take up to 10, 12 days, right, roughly. And then if you have, letters of credit involved in the transaction, after that, getting the acceptance or a payment from a bank in the chain can take up to 20, 25 days. It's a reasonable timeline. Like you're talking about roughly 40 days before you get those transactions converted into cash. And I have personally done those transactions, right, on electronic bills of lading, doing e-presentations, doing export letters of credit on EUCP, all of that. And you would be surprised to know that, when you talk about the issuance of those bill of lading, that timeline of 10 to 12 days can be roughly got down to roughly 3 days. I mean, there are still some delays, right? You need to get a bit of, shipping expertise on that. But then, so 10 to 12 days to 3 days is already a decent reduction. And then you talk about the documents part, right? On the export LCs and the letters of credit and the EUCP. From 21, 25 days, you can easily get it down to 7 days, right? I mean, you still need to move through the banks, right? They have their timelines in terms of checking the documents, but that's where what we're talking about. From 40 days to roughly 10, 15 days, it's a reasonable change. And what it does is it's reducing your working capital cycle. It's giving you better funding costs because your overall costing is lower. I mean, you talk about costing for 40 days versus 15 days, it's definitely definitely lower. And then you talk about various other problems that are associated with it. I mean, for those in the commodity industries, you would know, like there's a big concept called letter of indemnities. And if you see the legal person in the room, they will shake their head when you talk about that. It's a very interesting topic because it's a prevalent business practice that you use letters of indemnity. And I think there are, I mean, I'm not going to get into detail, but there are, various use cases in the market about those LOIs, and there have been various fraud cases about that, right? So with electronic bills of lading and various other DNIs that we can use in those transactions, we can easily go ahead and remove or reduce those letter of indemnities. So there are various, actions that we can take. And one more example that I will take is, I will go back to where I started working on this, electronic bills of lading and the EUCP and DNIs and so forth. Is back in the COVID days, right? I mean, we were doing a lot of shipments into China, and of course, we had our colleagues from the shipping line and whatever. I think you would be surprised to know that in some cases, because of COVID delays, the documents never reached to the issuing bank for like roughly 30 days, right? So that 30 days, the documents were stuck. It was just under quarantine. I'm using this word because that's what was told to us, right? These were under quarantine, even documents were going under quarantine, which was really annoying because it led to the disruption of whole cycle. In a lot of businesses, we have the requirements of original bills of lading, for custom clearance. I mean, when I say original, it can be digital or it can be in a paper form. But if we were not doing digital, it means that we have to produce paper, which would reduce all those issues. But then at that point of time, there were hardly electronic bills of lading we were using, which meant that our working capital cycle increased by 30 days and the cost corresponding to that.
Thank you. Okay, so look, great examples and hopefully some real life use cases. The three things I think I take from those things is, first of all, anybody thinking about this journey, although the Electronic Trade Documents Act under English law was only passed in September, you're not the first, right? There's lots of people doing this stuff, so there shouldn't be any anxiety about feeling like a guinea pig. Lots of people are working on this and doing this, so you should have some collective comfort, I would argue, in terms of embarking on this if you're earlier on in your journey. I think the other thing, and we'll move on to, and I can feel Nick's eyes in my back, so I'll keep it a little bit shorter than I might otherwise have done, is how do we not have a session at next year's conference saying how to unlock digitalisation, right? How do we have a session next year saying how do we grow even more? What a fantastic year of adoption and growth. So I think that's the challenge. So perhaps, Dominic, to you, and same question to all three of you, if I can ask you to keep it fairly short and succinct. But Dominic, so in terms of use case, what needs to happen? What's the action? Get back to the desk on Monday and don't just revert to what you were doing before. What needs to happen?
I could just say jump in the swimming pool, but that's not back at the desk on Monday, though, is it? So I will provide a bit more colour to that. I mean, listen, great survey done. Apologies to Parvaiz by JP Morgan Chase at the back end of last year, looking across 19 different industry groups, Fortune 500 companies, across the vast majority of industry segments. Businesses of all shapes and sizes have experienced increases in their cash conversion cycles. At the same time, funding costs are going up. So, there is a clamour, an increasing clamour from business to get something sorted here that fixes those issues. It doesn't have to be complicated. We heard reference in one of the earlier discussions to the fact that you can, scrape data using other forms of digital technology through file transfer and start to build the format and the data required for these instruments to get involved. We've spoken on earlier panels about standardization, and with no disrespect meant to all of those people working hard to bring about standards in e-bills of lading. There have been standards for decades, if not hundreds of years, around finance instruments in the forms of promissory notes and bills of exchange, whether they're written in English, Spanish, French, Chinese characters. They take the same form using a modest number of data points and can now be transferred securely and digitally. Do what other companies, we're working with a number of supply chain and banking partners at the moment, do what a number of these companies that we work with through them are doing. Get involved in a pilot, no longer a proof of concept, leave those behind, set up a pilot, find a discrete part of your supply chain as a corporate or a bank advising a corporate for that matter. Look at implementing digital tools, simple digital tools to bring that about that allows for dynamic discounting or post-maturity finance. Again, we've mentioned that earlier on in our discussion, and see that it works. I can reference a very large retailer, two large retailers, one here in the UK and one in Germany, poised to move forward with discrete parts of their supply chain because they see value. Also a very large European chemicals manufacturer identified 250 million euros worth of their supply chain that they want to move on to a digital type process. That's a drop in the ocean compared to their turnover, but it's a meaningful start point, and others have got to take similar decisions.
Thank you. Okay, let me just deviate slightly because of time. Have we got any questions? Conscious, I said we'd have some, or asking for the top participation. Is it a quick one and a quick answer?
It is a quick one.
Just project.
So can you say what portion of the bills of lading that you currently deal with in concentrates roughly are EBLs? And do you maybe have the same figure for Trafigura more generally, or with Sweden?
I think I would not run into the numbers in terms of how much we are doing, but if I give you a rough idea, in the last 4 months, as my team, we have done roughly 25 transactions on electronic bills of lading. And when I say that, I mean end-to-end transactions. I don't believe in just getting that bill issued just for the sake of doing it, and then you convert later on for the discharge code. We need to find real life cases where we can do it end-to-end, and there are real life hurdles that we need to talk about. And I mean, apologies, Wayne, we don't have time for that, but there are real life hurdles, or let's say issues that we need to get over, right? I mean, I'm ready to do tons of transactions on a day-to-day basis on electronic bills of lading. There's no problem with me. Problem is in the supply chain, right? At one transaction, I would not get the supplier to do it. In another transaction, I will not get the receiver to do it. In one transaction, the bank would not be ready to do it. In one transaction, shipowner would not be ready to do it. So there are these issues, right? And I'm pushing all out, right, with my bankers, with my charterers, with my suppliers, receivers, talking in all directions to get this moving. But there, as I said, right, in the beginning, there's an inertia, right? People need to start moving forward, right? And we have been sharing our live cases in general, and that was one of the reasons why I'm here as well. Like just go ahead and get transactions done. There's no point talking about this.
Absolutely. Okay. Unless there's any other burning questions, let me bring it to a close because I can see him standing up in my peripheral vision. So look, I think overall for this session, it's a mindset, I think. Don't be too anxious about being the first because you're not, and continue to collaborate and share use cases because I think working together, we can absolutely make a difference. So thank you, panelists. Thank you for your time. Are you going to take us into lunch?
I am, yes. Thank you very much. So we've got 2 sessions this afternoon for when we come back from lunch. So I'm going to be asking you to be back at 1:15. Okay, 45 minutes for lunch. For those of you who know that you're going to the corporate roundtable, that will be in the boardroom. If you've got any doubt about where that is, just ask one of the ICC staff. The rest of us will be back here for a post-ECDA legal discussion. That's at 1:15. Thank you very much. I enjoyed that.
Two.
I beg your pardon.